Okay, folks, we're going to put in a little bit of overtime here tonight because we're going to be talking about Microsoft's earnings, which were beautiful. I mean, they beat on top line, they beat on the bottom line. Absolutely outstanding work on the part of management. But as I always like to say, the market sends us signals. The market sends us signals, and it's for us to ignore. And we'll talk about it in detail tonight because we had a couple of signals out of the market that something was going to be wrong this quarter. One occurred several weeks ago, and it had me very, very nervous on the charts. The other was only a couple of minutes before earnings were announced this evening. So let's talk a bit about the earnings report. And I said, I was on a call with colleagues, and I said, look at the price action both on Meta and on Microsoft that somebody dumped really, really big right before the announcement. And sure enough, they were able to bid the shares back up. But it just seemed as if something was off. And sure enough, after the conference call today, the Asia division of Microsoft, which Asia makes up about 29% of the revenue growth for Microsoft. So it's a growth division for Microsoft. So it's very, very important. And we're going to talk about the valuation of Microsoft and also the valuation of the overall market in a moment, because we're at a point where, we're priced to perfection in this market. And they really needed to hit on all cylinders. So we're going to be talking about the price to multiple and also the price to sales. Price to sales. We're going to go over the chart. And we're going to go over, I don't know, I think that's it. And we'll call it a night. All right, let's talk about the earnings report. And let's bring it up here. I mean, it's really, really good stuff. They beat by over $1 billion on the top line. Their stock, the anticipated market maker move, and I said there was something wrong. There's something wrong. The stock should be much higher. Anticipated market maker move, but in the options market was a move of about $18. Before the negative news came out, we never even broached on really, really good earnings and revenues. We never came close to the anticipated market maker move. Right? Well off. So that was basically our second lesson. That was something wrong here. There was something wrong. The first one was actually, this is the second one. The price action after the announcement was the third one. The first one was right about, let's go to a 5-minute. Where's my 5-minute chart? I'm on a 5-minute chart here. And you can see that we closed out the session at 432.53 per share. They dropped Microsoft all the way down. And this is on volume. This wasn't a bad tick. This was on volume. Somebody dumped. A whale dumped all the way down to around 419 per share. That's a big drop. Those are billions upon billions of dollars worth of shares that were sold. Now, obviously, there was a bid underneath, and they bid the shares back up. But somebody, it appears, was in the know about what was set to be released. And I would argue, and I'm going to demonstrate in a moment, where I believe that knowledge of what was going to be the outcome of these earnings reports began to set in weeks ago. We'll go to the chart in a moment. So the press, or the press conference, I'm tired. The press conference did not go as planned. They talked about the Asia division and how that would be a decline. Let's go to Zero Hedge. We'll talk about the announcement out of it. Let's bring it up. Microsoft shares slipped lower during the earnings call, then plunged after releasing their guidance for intelligent cloud and Asia business segments, which showed slowing growth. They can't have this. Asia sales, this is still pretty good growth, but they're slowing. They're going in the wrong direction. Now, if Microsoft shares were cheap, then it really wouldn't make a difference. But Microsoft shares are not cheap, and we'll talk about that in a minute. So you can see that back in 2020, they went into a downtrend, petered out, and then they went back into an uptrend, and they've stalled out these past 3 quarters. They began to pull back in reality last quarter, but this forward-looking quarter is not looking good. So major concern for the market and for the share price of Microsoft. The reason why I say that the market is going to be concerned, well, Microsoft is the largest component of the triple Qs. And when you take a look at the share price of the triple Qs tonight, or I should say today, daily time frame, you could see that we had broken out of a range yesterday. Today, we failed to hold it. That's what you call a breakout point failure, also known as a bull trap. So while we didn't go covering shorts yesterday, I anticipated a pullback of the retest of the breakout point, and ultimately it did not hold. And the share price appears as though on the Qs they're going to be moving lower. We're not short of Microsoft, we're short of the triple Qs using the SQQQ. Now, when we take a look at, we're going to come back to the chart in a moment. When you take a look at the multiple on Microsoft, this is as of last quarter, not today's quarter. All these stats will be updated tomorrow. What I want to point you to is this. Now, on a price to earnings multiple, it's up at the higher end of the range. It's not ridiculously expensive, but it's up there. And this is an annual look. Quarterly look, that's a little bit too close. Annual look is a better look going back in history. We're up there. We're in the upper quartile of valuation. And when you juxtapose that relative to the S&P 500, which is sporting a trailing multiple of 37, that creates a bit of a problem. So when we take a look closer at price to sales, well, you can see that for the most part on this chart since 2021, we're at the high end of the range, but it doesn't appear to be all too expensive on a relative basis. Things change, though, when you go to an annual look and you go back historically and you take a look at Microsoft's share price at current price to sales. It's at all-time highs. Going back to 2010 anyway, it could be more expensive in the past, but going back to 2010, we are at multi-decade highs on the price to sales of Microsoft. So I mentioned earlier, here's the growth chart for Microsoft. Net income, that's really what you really want to look at. Net income is declining dramatically, and this is through the June quarter. Doesn't include this past quarter. Now, it may tick up, but the growth moving forward, and that's what really matters. Remember, the stock market is a forward-looking mechanism. What you did for me yesterday really has no bearing on what I'm going to do for you tomorrow. So this share price for Microsoft on its earnings report should be a lot higher, but it's not because there's a forward-looking factor here. It's pricing in forward-looking growth, and it's not looking bullish for Microsoft. Add that too, that the market is overvalued. The price of the shares are overvalued. Well, then we have a bit of a problem. And I mentioned earlier that the market was sending signals several weeks ago. You can go actually back to let's go to a weekly chart and smooth this out a bit. Let's go here and let's talk about August a bit. You could see that Microsoft had been outperforming. Here in purple is the S&P 500. So we're doing a comparison chart relative to Microsoft. So in purple, S&P 500 candlestick, we have the Microsoft share price. Microsoft shares have been selling off along with the rest of the market, to be fair. They were leading the market and they led the market down. Not a big deal. Here's the problem, is that the price of Microsoft, while the S&P 500 is moved to all-time highs, Microsoft has not. So here's the trend. S&P 500, Microsoft, since July. So clearly, on a relative basis, Microsoft has been lagging the S&P 500. And even when the S&P 500 began to break out a few weeks ago, let's go to wish I had them up here already. Let's bring up my other chart. I know this is noisy. You know what? I'm just going to do this. Make this quick. So we're going to bring up Microsoft. And we're going to go to a daily chart. Okay. Now take note of the price action back here. And let's overlay the S&P 500 up top. All right, we'll make that blue. No, we'll keep it purple for continuity purposes. And you go back to, let's get these Bollingers off. You go back to early October. I was saying I wanted to short Microsoft, but I held off. Because I am really tired. I've been up since 4 o'clock this morning. My apologies. Okay, so you can see back here in very early October that you almost had a death cross. The 50-day moving average almost crossed down below the 200-day moving average. All the while, here's the S&P 500 grinding up higher. So to me, the market was telling us a story that makes today's price action in Microsoft not unsurprising. It's not that I knew that Asia, the Asia division, was going to see forward-looking growth declining somewhat or not growing as much. But the market was telegraphing it, and it telegraphed it earlier in the month. It telegraphed it minutes before the announcement today and after hours clearly. And as a matter of fact, before the press conference, the fact that we didn't even hit the anticipated market maker move on their revenue growth was over $1 billion beat. Their earnings EPS growth estimate beat by a wide margin. Share price should have been up 20, 30 bucks easily, but it didn't. There was something wrong. And now we know what it was. So the market sends you signals. That's the value of technical analysis. And let's see if we have any questions at all. At least out Magic 7 for cash and gold. Yeah. Gold has certainly been doing well. I think that we may be at a short-term top in gold because you're seeing like we sold palladium the other day. Palladium We were long of it, and we sold it right here on this filled candlestick. And I'll look to get back in, but I just want to see whether or not the 10-year yield continues to move up higher. That was down today, and the dollar was down, yet palladium was down, silver was down. We'll take a look at that really quick. So I don't know whether or not what has been working will continue to work in the short run. Here's silver. That was down today, yet gold closed up. New all-time record highs today. Now, taking a look at gold, to be honest, I put on a short position, small short position of gold in the futures market right before the close. And I'll bring it up. We went short using the MGC, and we're making a couple of bucks on it right now. I don't plan on staying short for very long. I may even cover this before I go to bed tonight. But we appear to be weakening up here. And you don't have Asia open yet, but it will be soon. So we'll see what they have to offer, see what the reaction is out of Asia, and whether or not you get any follow through to the downside on gold. I was watching the price action of the S&P 500 and gold later in the day. They were pretty tightly correlated. Not that they're always correlated, but they were pretty tightly correlated. So we may get a bit of selling, a bit of profit taking across the board over the course of the next couple of days. So it's going to be an interesting couple of days. We are short of the triple Qs using the SQQQ. I didn't go adding more on that failed breakout today, but we already have a sizable position. We were bigger. I made it smaller, but you can see here that we're up in the after hours session. I suspect that we'll get some follow through tomorrow. Let's take a look and see how this looks on a 4-hour view. And we're looking pretty good. We have a breakout. And they're pumping it up higher. We have about 16 minutes to go until they close out the after hours trade. Then I suspect you're really going to see the fireworks hit in the futures market. Right now, you have the NASDAQ futures down 0.48%. My guess is we break lower as soon as they close the after hours session here in the United States. You have the 10-year yield, which is up. Wow, again, 10-year yield up nearly 3/4 of a basis point. Let's bring up the E-minis, see how they're reacting. They're not reacting well. We're just off the lows of the session, down just shy of about 1/3 of a percentage point. Taking a look at the YM, this is the Dow Jones futures action, and it's down fractionally. Taking a look at the US dollar to get a vibe for where money's flowing. Not much of a bid under the dollar. And let's close it out where we began, and that's with Microsoft. We are off the lows of the session. The session low was $409.77. Last tick was around 417, around 417 per share. So I suspect that in the next few trading days, Microsoft is going to be trading down below its 50 and 200-day moving averages and down in the $300 range. I would be very, very careful here. Remember, going back to this chart, the markets were telegraphing the weakness on Microsoft weeks ago. Remember, S&P 500 rising. If you want to swap this out for the triple Qs, it'll probably look not as bad, the divergence, but there's a divergence there nonetheless, because the Qs have not followed through with the S&P 500. But there it is. There you have it. The triple Qs still on a relative basis outperforming the price of Microsoft. And again, I think we're going to be retesting this 420 mark tomorrow morning easily. We're doing it right now. I think that ultimately we break down into that $300 range as soon as next week. So it's a bold statement. I'm sticking to it. If you're not currently a member, sign up 14-day free trial offer. Get TrendSpider for free. Silver and gold level members get that. Everybody have a profitable trading day. Have an awesome Halloween. And I will talk to you soon. Be well. Hey, Talon. Welcome, brother. Welcome.